is Las Vegas Vantage with your host, Rocky Dickerson.
Hi, and welcome to Las Vegas Vantage. I'm Rocky Dickerson with Realty One Group. Here on Las Vegas Vantage, we do talk about the real estate here in Las Vegas, and even more importantly, we talk about the community of Las Vegas, the people that make this such a great place to live. Now, today we're actually combining both. A great person here in Las Vegas. We're talking with Charity Bond of EPiQ Lending. Charity, how are you doing today?
Wonderful. Thanks for having me again, Rocky. I appreciate it. Everything is great.
Fantastic. So Charity is an expert here in Las Vegas at being able to get loans closed, helping buyers be able to purchase that home of their dreams. And I've seen her really work some miracles. So that's why I wanted to bring Charity in today to take a look at what she sees as far as Las Vegas is concerned in the real estate market. So Charity, when it comes to the outlook for 2023, what briefly would you think would be some of the changes we might look at this year?
Well, honestly, Rocky, we're going to have, I know there's a lot of gloomy, news reports out there, but actually, I don't think that's really going to affect Las Vegas as much as we might think. We're going to see a little bit of a slowdown, maybe that first quarter of 2023. However, this week, mortgage applications increased by 1.9%. So people are getting back into that. I think they're more used to the interest rates being where they're at. And there's a lot of different activities that we can discuss later that if they want to buy now, we can help them in the future when those rates do get back down.
Sure. Now, I understood that because the number of loan applications went down, say in October, November, that the mortgage rates had actually dipped down below the 7% level in December, and that was stimulating a little bit more activity. Where are we standing right now as far as the rates in late January?
So actually today's rate is 6.17%, which is down quite a bit, over a half a point down from where we were at the end of last year. So we did have that little bit of a dip, and we're hoping to see it kind of level out a little bit more this year.
Great. So it sounds like now is a great time to buy if you're looking to purchase. And of course, if you're looking to sell and get the highest price, I would assume that when there's more buyers out there, that's going to be a great thing as well. Would you agree?
I agree. Yes, absolutely. And we're getting a lot more qualified buyers. That is the thing that is very important for those sellers. When now, because we're not so bombarded as an industry as we were in 2020 and 2021 when those rates were so low, we're actually having buyers. And here at EPiQ, we can offer a 21-day guarantee close. And if we don't close on time due to something at our fault, not a third-party fault, we will actually pay them up to $1,000. So the thing is we're seeing a lot faster turn times, and we're seeing a lot of the sellers working with the buyers in terms to accommodate some of those interest rates. So I think it's making the market get back in there.
Sure. Now, I know that one thing that we've seen lately is a lot of the Chicken Little, the sky is falling.
Yeah.
People see the inflation figures coming out. People see the stories about Fed rates going up and such. It looks like we've got a lot of people that are panicking, and yet this is not 2008. Would you agree?
I agree. Absolutely. So the president of the Mortgage Bankers Association had actually come out and said that this is more like a 1974 or 1980 market, which is inflation, right? We have cost of goods going up. We have oil going up. We have some shortages. We had some shipping delays. So as an economy, as a global economy, we're seeing more of that hit. However, in 2008, that started with the housing crisis. We had foreign investors coming in, getting very aggressive. No doc loans. We're not offering no doc loans. As a matter of fact, some of those mortgage lenders have kind of pulled back a little bit. Wells Fargo being one of them. They decided not to originate on a correspondent level anymore. So we're seeing a lot tighter qualifying. So we're not seeing that actual, 2008 crisis where, the sky is falling, the prices are going to plummet. As a matter of fact, this is something you could probably comment on. We haven't seen as much of a dip in 2022 and 2023 that everybody was expecting to see. I know a lot of buyers were on the fence thinking these prices would fall, And we haven't really seen that. What is the median price right now?
Actually, it's funny you mentioned that because just today I got information that the median price has gone up this year. We ended at 425, but right now we're at 437 for the median closed sales price on houses here in Las Vegas.
See, that's not a 2008 market. So that's kind of some good news for us, right?
Sure, exactly. And the whole thing is, back in 2008 as well, we had so many builders that were overbuilding. And lately we've had builders that are pulling back on the number of permits that they're pulling. And so we've actually got a kind of a short supply from them.
Exactly. Yes, they did decrease their production a little bit just because it is getting a little bit harder for them to charge as much as they were. And they were offering a lot of incentives, reducing those sales price, but that didn't translate to the resale market.
Gotcha. Now, I understand as well that there's some talk about being able to reduce the amount of MIP on an FHA loan that might come to pass this year. What have you heard about that?
Yes. So in late 2022, the Mortgage Bankers Association, or MBA, had submitted some documentation regarding the reduction of the monthly FHA premium. So just to explain really quick, FHA has an upfront premium of 1.75%. and then a monthly 0.85% or 0.80 if you put more than 5%. All of that money, those premiums that you pay, doesn't just go for vacation money for the feds. They actually put it into an account and they have to estimate their losses that they will get on FHA mortgages. They actually have not been seeing as much of a loss, so they have a surplus. They have to keep about a 2% reserve account, and we're currently at 11.11%.
Wow.
Yes. So they have.
What would happen, I mean, if they did end up reducing this?
Yeah, so just an example, I mean, so we're just going to go off. You said the median sales price is about 437, correct?
Yeah.
So if we did 437, excuse me, I'm just gonna, I wrote some notes down, but if we do the 437 loan amount, your premium would be about $298 a month on an FHA loan. So they haven't, it's still going through Congress and Senate, and we know we just had a transition in the House in January. So it's going to take a minute for them to get back on track with their, legislation part of it. But let's say that they reduce it to 0.3 temporarily. This may be something that they only do for a fixed time. And if they reduced it to 0.3, that would give you $185 a month versus the $298. So that is a huge saving. Translating roughly, I mean, it depends on loan market area and interest rates and everything, but that's about a $66,000 more that buyer should be able to qualify for.
Wow.
So now, again, we don't know what the premium will be, but just to give examples of what it could look like if once they go through that legislation.
Gotcha. And so now when it comes to the kind of market we're in now compared to what we've been in the past, I've heard talk about the Fed is still dealing with a 1980s market, and yet the Treasury is actually on point. What do you see happening as far as interest rates are concerned this year?
Okay, so technically, when the Fed raises the interest rate, that is not a direct correlation that will translate into the Treasury market, which is where mortgage rates are based off of. They are two different markets. So, on the stock market, it's who's investing in what. The federal came out and said that they are not going to reduce rates, and they do still see some increases. However, the Treasury market is sitting in a very comfortable, the 10-year yield is sitting exactly where it needs to be. So again, this goes back to that 2008. We're not in a housing crisis. We are in an inflation situation, very similar to, let's say, 74 and 80 started with oil. So if we all remember back in 2021, we saw a huge increase in oil production, not oil production, oil cost, because we had a lack of production, right? So once we did that, we shut down some pipelines and had to redo some, environmental stuff. So that translates into transportation costs, boats not getting to where they need to be on time, things like that. That has caused this inflation astronomical. So that's where the federal is still looking, but they're not going to get those. I think we had, discussed before, lumber costs are down, right? Here locally in Las Vegas, we've noticed that gas prices have gone back into the $3 a gallon, sitting at about $3.80, depending on where you go, versus almost $5 a gallon. So we're seeing some recovery with the consumer price index, so the CPI, and that is going to translate. Unfortunately, though, our Fed has a model that they won't see those results until the end of 2023. They're not looking at live numbers. They compile data, and then it just takes a while to hit fruition, in terms of rates.
Gotcha. So it sounds like an optimistic outlook here for the year 2023.
Absolutely. Yeah. I mean, people are still making really great money. There are some things in the market that we would like to see for affordability of mortgages, because with the interest rates being higher, prices not really going down as much as they have, we would like to see a little bit of a correction of the market, but overall, it's still very profitable. It's still a great option to buy a house at this time.
Sure.
Just a little tidbit on that, most banks, EPiQ for one, is offering a 5-year rate rebound. So if you purchase anytime, you have to lock in your interest rate by the end of June of 2023. You have to close by September of 2023. And you have up to 5 years to refinance that mortgage and secure a lower rate, no cost from our lender fees. And we will pay up to $1,000 of third-party fees. So this is a nice opportunity for people to take advantage of the seller's equity, get some buy downs, do whatever they need to do, and then be able to get a no-cost refi in the future.
So like they say, you can marry the house and date the rate.
Exactly, right? It still applies today.
Perfect. So it looks like we've got a lot of good news happening here. But I'll tell you what, we've talked a lot about business. Let's talk about what it's like to be a member of the community here in Las Vegas. 2023, what kind of special events are you looking forward to this year?
We are actually hosting the Pro Bowl this year, which is phenomenal. Love it. Tickets are actually reasonably priced. So I like that. And we have the F1, the Formula One racing that is coming. We have actually a dome that's supposed to be like the perfect venue to see concerts and, things of that nature at. So Las Vegas is really, I don't want to say growing as much as I want to say we are maturing. I feel like we're not all, okay, well, I don't want to say that. We are still about fun, and what happens in Vegas stays in Vegas. Don't get me wrong. However, I think we are offering a more wide variety of restaurants, and really our entertainment venue is just, off the charts.
Gotcha. Well, how about in the last couple of months, any new restaurants or entertainment venues that you've discovered that you really enjoy?
So I'm going to start with an entertainment venue. I'm going to do a little bit of a brag. I have a daughter that is in dance, and she recently had the opportunity to perform in Legends at the Tropicana.
Wow.
And so the Legend show is 3 separate Elvis impersonators that they go over his life. The show is phenomenal. They have like Elvis and Anne Margaret, and so they have like an Anne Margaret thing. They all sing live. It was absolutely, if you love Elvis, I'm telling you, I was out of my seat. I honestly wanted to throw clothes up at the stage. Like, that's how I felt like I was seeing Elvis in the 50s. It was absolutely amazing. So that is my thing. So if you get over to the Tropicana, very inexpensive shows. Local restaurants, this is actually, so it is not a chain restaurant, but it's called Honey Salt. Have you eaten there before?
Oh, yes.
It's over in our local, like, Boca Park. Oh my goodness. They have like a summertime, like, margarita drink that is amazing. Like, it is, and all of their food, most of their food comes from local farms and, produce and stuff like that. So it's all fresh, like farm to table kind of thing. And it's like just unique dishes that they've experienced throughout their travels around the world. So it's adorable, and it's phenomenal food. The atmosphere is great.
Very nice.
Yes, love it.
Well, gosh, Charity, thank you so much for being with us here today. If someone was looking to get more information about the loans that are available and how they can qualify to get into a home, how should they contact you?
Well, I would like to say the easiest way is my cell phone number. So 702-622-8494. Again, that's 702-622-8494. Or you can always email me at charity.bond@epiclending.com. And it's EPiQ, LENDING.com.
Perfect. Well, Charity, thanks again for being with us here today on Las Vegas Vantage.
Thank you so much for having me today.
And thank all of you watching today. As always, should you ever be looking to sell or buy your home here in Las Vegas, I would love to give you superior service. Please give me a call, Rocky Dickerson, at 702-743-7625. Email Rocky@RockySellsVegas.com. And please subscribe to my video channel.